We avoided the worst January ever on record for the NASDAQ. Think about that. Worst January ever? That's a pretty extreme situation and doesn't make a whole lot of sense when we don't have a recession, when we don't have a serious economic event that would cause the worst January ever. It's been a whole lot of bad Januaries. It's been a whole lot of bad periods in the economy, and we're not in one of those bad periods in the economy. As a matter of fact, last quarter, we actually had better than expected GDP, 6.9% up from 5.5%. That's fantastic and fine and dandy. We've talked about on this channel how we want to avoid extremes. We don't want to get ourselves in this maximum hawkish Fed or maximum dovish Fed. We want to view ourselves in the middle. This is in my opinion, very middle ground area. We've been in not so much of a middle ground area. We've been in more of a dovish Fed environment, rallying stock market environment. Now we've got a Fed that's not becoming, in my opinion, we'll see, uber hawkish, but is becoming more, we're going to begin to tighten and we're going to begin to normalize policy. As a matter of fact, that's what Jerome Powell said. He said, we're on a long road to normal, not a sharp tightening cycle. A long road to normal, not a shortcut to normal, a long road to normal, a normal environment. In addition, he said he wants a long expansion like the one that we had seen prior to the pandemic that lasted many years and would have continued to go on if it weren't for the pandemic. And he also said that requires price stability. All normal things. I think we can take a sigh of relief. Now, today we see 10x growth stocks rally quite strongly. And we've been advocating 10x growth stocks on this channel the last couple weeks, even before that, as they have been down for a year and massive losses, 50% plus, all the way up into the 80s and 90s%. Today we see a 5 to 10% move, quite strong depending on the names you're looking at. The ones we're looking at over here, Editas, CRISPR, 23andMe, Virgin Galactic, Palantir, Jumia, etc. In that range. Smile Direct Club, going to throw that one in there as well. Seeing fantastic moves. And I do think these stocks deserve to be a lot higher. And they're quite cheap right now. And even after today's move, they're quite cheap. However, what I don't want to see is massive continued moves every single day. One 10% day from 52-week lows is fine. I'm cool with that. We can have that occur. I'm not saying anything's crazy about today. What I do want to avoid and what I am cautious about is a massive run here to new 52-week highs. The Fed is tightening. Can't ignore that. That is going on. It's not going on in a hawkish way, in my opinion. It's going on in a rather normal and temperate way. Not dovish, though. Just normal and temperate. We're just going to let the excesses not be so excessive. And I want these stocks to have a normal, gradual incline and to have that kind of run. I want a more natural environment. The extremes are going to result in downside if we get an extreme move here. There's definitely a lot of pessimism out there. We saw that before. It's good to see a little bit of a bounce here. Mean reversion. Obviously we got possibly too oversold. We'll see if that low holds. I think it will. But like I said, I'm not a fan of extremes in this environment. I'm a fan of temperate progress in the stock market and stocks winning on their individual merits. So there's a lot of 10x growth companies and large growth companies that are still too expensive, and those should fall. So they shouldn't all be trading in this same kind of bucket that occurs on nothing. I don't think anything happened. As far as I'm concerned. The 10-year treasuries remain flat. That's optimistic, but it's not an event. It is optimistic, in my opinion. Again, showing nothing crazy and extreme going on. Mean reversion today is cool. If we get another day tomorrow, that's cool. If we're down tomorrow, that's cool too. But I would like to get away from this whole all growth stocks move in tandem and even the bad ones move 10% in a single day. Because that is what's going to cause us problems in the future, is if WeWork is moving 10% when Editas or CRISPR Therapeutics or Intellia is also moving 10%. It's not good for those companies. Those companies, people should be talking about how genetic engineering is the biggest thing to occur, possibly ever. And WeWork is just losing an aggressive amount of cash. Their balance sheet could be the most atrocious balance sheet I've ever seen in my life. Number one. And I've looked at some balance sheets. This is bad, in my opinion. So I don't want these two stocks moving together. I want WeWork moving down on its merits, and I want the CRISPR stocks moving up on their merits. So seeing them together, not saying the CRISPR stocks, shouldn't have that move. They should have that move, and they should keep that price level and possibly see more. But these stocks, there's others besides WeWork. I'm just picking that because it's a very obvious and clear example. Have to continue to sell. So I would like to see this balance occur. I think that balance would be a great thing to see. Wouldn't you? Wouldn't you like to see that balance? I think we all would. So that's my outlook. Quality names, individual names have to be chosen. There is some bad names out there. So be very discretionary. Be very specific. Make your choices. I know you do. You watch this channel. You're obviously focusing on this stuff. The high level of intensity. So that's today's video. Hope this made sense to you. Feel free to ask questions or leave comments. I appreciate you watching the video. And until next time, peace out.